This is Mike Dole at the Mortgage Firm, and it is Wednesday at noon, so that means we're live. So every Wednesday at noon, we do lunch and learn. We're here to answer all your mortgage-related questions. So it's just a casual format. You can sit down, just shoot at us any questions you have, and we'll cover some topics. We'll hit on a few things. 10-year yield rates are fairly flat, but ticking up flat. And we have the new Hometown Heroes went into effect this week. So it's open up to everybody. We'll go ahead and cover some of the Hometown Heroes updated information. And we'll also touch base on the home run mortgage, which is something that we're the only Florida-based company that is piloting that program. It's 3% down, no mortgage insurance. And I am here, as I am every week, with Tom Bennick. Tom Bennick's been in this industry forever. Tom is old school customer service. He'll meet you at your house, the restaurant, the bank, whatever you need to do. He does whatever it takes to help you get that loan. Tom does a lot of alternative financing, bank statement loans, DSCR, which are the debt service coverage loans for investment properties. But Tom's been in this as long as I have.
Which is very nice to know. We've been in this long enough together. Misery does enjoy company. I hope everybody had a nice, safe, and happy 4th of July. Yes, we're going to go through some new programs that came out at the beginning of July. The Heroes programs, a little bit of the details with that one. Occupation is no longer a requirement. And as Mike mentioned, there are only 16 lenders, I think, throughout the country that are offering the pilot program that we're going to be talking about also that's called Home Run. So we're going to get into that a little bit today as well.
And we're going to talk a little. The Hometown Heroes is one that we've been doing. It came out July of 2022, ran out of money in June of 2023. So it didn't last the full year. So this one here, we're expecting will probably run out of money soon on this one. And I know we touched on it last time. Is I put my over under. I put my date is December 31st. So I know most of the people are betting against me that it's going to run out earlier. Obviously, they're all legal bets, but it's the consensus seems to be it might run out early. Now, I might have to up my bet with Elizabeth because she's one person who thinks that it's going to last a little bit longer. Now, hopefully, if it runs out, they'll refund it, but there's no guarantees. So we'll see. But if it ran out in 11 months and was only open to first responders, educators, law enforcement, a lot of people in the medical field, and more people know about it now. And I feel like people have been sitting on the sidelines a little bit because there was so much turmoil that we're seeing a lot of activity now. So we're watching a lot of people jumping back into the market. And with this new program coming out, I think we're going to start seeing, a little bit more activity. And you're probably going to see a lot of reservations for this money. Now, in July, everybody's been waiting for it for a while. So I'm expecting July to probably have a lot of reservations. So we'll probably look at a good chunk of the money going in July, but then hopefully it'll stabilize after that. But I wouldn't be surprised. You would think that 1/12 of it would be gone in July, if it's 1/12 each month. But boy, Tom, I could see with the anticipation that 20 to 25% of it could potentially be gone by the end of July. We'll see. That'll be an interesting number to track.
Yeah, there have been a few people that we both have, or I think we all do, that have people waiting in line just on deck, waiting to just find a property that might have already gone in. We haven't been able to reserve their funds. They're just waiting to find the property, but their pre-approval and their loan paperwork and stuff has already been turned in. So, yeah, I think there's a few people waiting to just as soon as they find the right property, they're going to be ready to pull the trigger.
Yeah, and that's one of the other things too. And we get these all the time, people asking us stuff, and I just can't reinforce that there's just no crystal ball. There's not a crystal ball on rates. There's not a crystal ball on home values. One of the things that will be interesting, though, is to see how much of an effect the Hometown Heroes will have on the housing market, because you have a lot of people jumping in July, August. So July, August will probably have a fair amount of people jumping into the market buying. So with the rates being high, but the Hometown Heroes releasing the money, what will we see with the housing values? A lot of people are thinking there's a crash, and I just don't see that. I don't see that. I don't see it happening. And I think as these programs come out, you have the interest that people, they have to move. I mean, life goes on, and you can only put your life on hold for so long. So people have to do stuff. These programs are out there doing it. eventually these rates should tick down. And again, no crystal ball, but everybody in the industry seems to have the belief that the rates will tick down over the next 2 years. So as the rates tick down, I think you'll see people that have been holding off on the sidelines for a while realizing, again, life goes on. So, not to go back too heavy like in the 10-year yield, but on the 10-year yield's at 3.8, pushing on 3.9 today. The highest it's been was, 4 points in the last, since it started rising up. So I feel like if we can get back down to, 3.2, which is where we were not too long ago, you're going to have a lot of people with a renewed interest. So if we can start locking rates into the fives, I think we're going to have a renewed interest. And hopefully we'll be looking at that sometime in the next year. And again, no guarantees how these things are going to shake out.
Well, even with that anticipation, I think a little bit, we've all been waiting for the recession that still hasn't come. So I think since the beginning of the year, that's kind of what we've kind of heard about. And yet, obviously, we know that the economy is still as strong as it is. And with that being said, I think that's going to keep rates where they are, if not even going a little bit higher, until something gets back in check where the Fed starts pulling down off on raising rates to cool off the economy. Our mindset is look, if you can't wait till everything falls right into place. There's going to be, look, the rates are a little bit higher, of course, than they were a year or 2 years ago, whatever it might be. Again, once you find the property, that seems to be the key. Not the rate, but finding the property and getting in on the property is I think more important than getting the lowest rate that you can get. Not that interest rate's not important. However, finding the property, I think what today inventory is going to be one of your biggest challenges.
Yeah. Now we will jump in just because, I don't know, just because maybe we're just going to run away enough of you, but I do like to, we don't want to overdo this too much with sometimes the 10-year yield, and look at that 3.9. So it did pop up over 3.9. One thing I like to talk about is, in our industry, people, what's the rate? Everybody, what's the rate? I mean, the rate's whatever you want it to be. I mean, you can pay enough points. You can give me tens of thousands of dollars. I'll get your rates in the fives. I mean, maybe even lower if you're willing to pay all your interest up front. If you're doing private money lends, you're 12, 14%. So what's the rate? And also, is it Hometown Heroes? Is it Home Run? Is it conventional FHA, VA, or your credit scores? So there's so many things that go into your loan. So the only problem with that is, and this is always a concern I have with our competition, is when you're calling around, you're saying, what's the rate? There's nothing easier than just quoting a rate that doesn't exist. So we want to make sure that we're not doing that. If I'm quoting your rate, I'm quoting your rate. It's the rate where we are today. But the other guy knows he'll just quote you a quarter better and he'll beat me and he'll get your business. And then when it comes time to lock, China, Russia, inflation, the economy, there's always an excuse why they couldn't deliver the rate. So I always like to know, what's the 10-year? So if I'm quoting a rate today and the 10 year's 3.9, and you're doing a pre-approval, and then 3 months from now you have a contract, and then I'm like, oh well, geez, I got all the excuses in the world, and now the rate's 7.25 or something, and I was quoting you in the high sixes. Well, if the 10 years at 3.9 in 3 months, and the 10 years 3.9 today, I should pretty much be right about that rate. I should be pretty close to that rate. So obviously, when we come over here and we see if I'm quoting something around here, and then it comes time where you're actually locking, your rate should be a lot better. Now, if you can't see this is 1982. All right, 1982, where the 10-year is up, over 15, and then down here, we're showing that, where the 10-year right now is 3.8. Now, the only thing I caution about that is, we always say, yeah, the rates are really good. Rates are still low. And when you look at this overall, picture of rates, yeah, they're not bad. But, as a father of 4 kids in their 20s, they're all somewhere in the home buying process. I let people know I bought my house at 2.5 times my income. And that same house, termite infested, wood frame, piece of garbage house, just sold for 7 times my son's income, who is in a similar type of profession. So you can pay a little bit higher interest rate when the house values are a little bit lower, but as the house values increase, paying the higher interest rate is a little bit tough.
Yeah, it seems to be that although I think there are some, pullbacks a little bit in sales prices, I don't, typically when you see one go down, you're going to see the other one go up, the other one go up, the other one go down. I don't see much. I don't see both of them going down substantially consistently anytime soon. again, rates just seem to be on the uptrend, and home values are still kind of hanging in there, give or take.
Yeah. Yeah, and we're getting experiencing this over, the next 2 years. So when somebody says, or who knows, the next 3 years, what it's going to run. But when we say that we're projecting them to trend down, you know what? If you're buying in the next 2 months, or the next 30 days, you don't care that they're trending down over the next 2 years. You care what they're happening in the next 2 months while you're buying a house. So you can see right here, this was in March, where they were up over at 4% on the 10-year, which means that the 30 years were up over 7 for the most part. Well, now they're trending down, and we're getting all excited. They're bouncing around, but they're bouncing around as they're dropping down. Before we know it, we're at 3.2, and the rates are stabilized. We're starting to get a little bit better rates. We could have people buying down into the 5% interest rate. So we're very optimistic. But then, as you start watching, they start bouncing around. But as they start bouncing around, trending up, then it's a little bit frustrating. Now, I have some optimism when I see, that in the last 6 months we've had them a little bit lower with the goal that they could trend down. So my goal is that in the next 6 months, we could be hopefully we're looking at numbers like this. But again, there's no crystal balls. So we tell people is, what? You just lock. When you get the contract in, we try and lock you. And if the rates drop significantly, we have the ability to adjust down a little bit as we're coming towards closing. But anybody who just says, oh yeah, we lock it, we just float you down, they're not telling you the whole story. We lock it, and if the rates drop enough, we can drop you some. All right, but you're just not getting the whole story when somebody says, oh yeah, just lock them, we'll float you down, no big deal.
And in our defense, everybody go back, if you don't mind, Mike, to where the March 14th, give or take, you just had it.
The last 6 months, back down here to 3.2 when it was at 3.2.
So yeah, a little bit in our defense. If you go just look at the chart and what they call choppy between March and July or today, when people ask what's going to happen with rates, look at that chart. You think we know? I mean, we don't know. It would be like, imagine if, your job is that chart. Would you know basically what's going on that day or the next day? So that's why sometimes when we get asked that question, there's a lot that goes into our answer. So sometimes it's just a matter of I can give you a range, a range of what I think might be happening with rates. But, that's, again, like Mike said, there is no crystal ball. So we just give the best range that we can. Yeah,
you know what? You're right. Like I said, when you come in right here, when I lock my customers that day, I am a genius. I'm calling that customer up. I'm letting them know how lucky he is. He got the smartest guy in this business.
Yeah.
Now, when I lock the guy that day, you're not getting a call here until we're trying to maybe float his rate down. Unless we can float his rate down, then he's definitely getting a call. But Tom, you're so dead on when you're saying, like, I don't care what guy you're listening on TV. I don't care how much he's gotten paid. I don't care what Ivy League school he went to and what other Ivy League school he got his master's and PhD from. He didn't say it was going here and then it was going here, then it was going here. Nobody was predicting. I will give them any amount of money if they show me the prediction, that looked like this ahead of time.
Yeah.
It's just you just don't always know.
We've talked about it before. You can get 10 economists in the same room and they'll all have a different opinion on what's going on. So, it's who the heck knows? It's really hard to predict, especially with what's going on in the economy.
All right, look, and I think maybe we've beaten this 10-year.
All right, we've beaten it senseless. Regretfully, we didn't beat it down. It's still at 3.9,
but we're somewhere in the area. All right, let's go ahead and we'll pull out some of back to the hometown heroes. So let's
so starting July 1st, which is great. Occupation is no longer one of the requirements. Again, we've got some bullet points here that we're going to go over with you, but this is the new Hometown Heroes loan that became available, I think, July 1st, or started funding, of course, on July 3rd, which is the other day. But here are some of the bullet points. All first-time home buyers, regardless of occupation, this program provides down payment and closing cost assistance to qualified home buyers. So the benefits and the features, of course, competitive first mortgage rates. These programs have their own separate rate sheet. When we go price these loans out, there is no buying down this rate. Whatever the Hometown Hero program, FHA conventional sets for the rate for this program, that's what the rate is. So we get those on a separate rate sheet every day, and they are lower than normal FHA and conventional rates. No origination fee, of course. There is no charging of origination fees on these loans. 5% down payment and closing cost assistance up to $35,000. So just whatever your final loan amount's going to be, times that by 5%, up to $35,000. That's how much the second loan is going to be, which we will get into. DPA non-bond. It's a non-bond loan that's only available, of course, in the state of Florida.
And we do bond loans, and there's a couple things, that are different on bond loans versus hometown heroes. They're both offered out of the Florida housing, but sometimes sometimes if you have like a non-occupant co-borrower, a bond loan might be a better loan for you. So the bond is going to generally cap you out at about $10,000. A lot of the same stuff, 640 minimum credit scores, but if you're a first-time home buyer making under, we can pull it up later, I think it's $90-something thousand a year, you can qualify for the bond. Now with the hometown heroes, when you're co-borrower, if your co-borrower is making $100,000 on top of that, now you don't qualify, because hometown heroes, you take everybody's income, qualifying income, and that's what you use, and it's going to disqualify you if you're over $146,000 in Florida. But for the bond, it only looks at the household income. So bond, if you're buying a house and we're just qualifying under your name, we're going to take a look at everybody in the house. So we're going to take a look at your wife or any of your adult children. We're going to add up all those incomes, and we're going to see that they're under the limits. But the non-occupant co-borrower, we're not going to add their income because we only look at what's in the house. So the bond has the ability to really help in a couple circumstances. Now, the one thing, we say is with the hometown heroes is you have to pay the money back. With both of them, you have to pay the money back when you refinance, you sell, you change the deed, or you turn it into investment property. Now, there's two things about that. If you have the money, that's the greatest thing in the world. I'll have customers that'll say, oh, I have the money, I don't want to deal with having to pay them back. If you have the money, that's the perfect thing. So the government is giving you the money. You're paying taxes on the money. Your taxes are going into the fund that funds the money. So you might as well take the money that comes to you, because the interest rate is lower, the closing costs are lower, no discount points. The $20,000 that you were going to spend, take that $20,000, throw $10,000 in an I-bond, $10,000 in something else, talk to your financial planner, whatever they say. Throw the money off to the side, and then when it comes time to refinance in a year, pull the money out, and at least you got your interest. What are the I-bonds? I-bonds are 6.5% or so. At least go ahead and do that. But take their money and just realize when you refinance, sell, or do that, that money that you invested was money that you would have spent anyways. Now you've got the lower closing costs, lower everything, lower interest rates, and then you've got some interest. So take the money, just know about it. The part that scares me is when you have no money at all, and you're using all this for your down payment, closing costs, prepaids, everything. And then when you move into the house, you don't have anything to cover the windows up. You have no money. So you need to be able to save money, or hopefully you have enough appreciation in the house. So when the rates drop, which again, no crystal ball, but it is projected that within 2 years, we should see a decent rate in rates dropping. You want to be able to take advantage of that refinance, because if they drop substantially and you can't refinance, it's going to cause you a lot of money. So when you look at what it's going to take to pay them back versus what your savings is going to be, it's a good investment. So you just want to keep in mind that you're borrowing the money now and saving it for later. So that's the goal.
Yeah, again, as Mike pointed out, it will have to get paid back at the time that you either sell the property, refinance the property. Of course, when you refinance that property, you're going to have to pay this loan off, and you certainly want the equity to be in your property to be able to do that. So, those are things that you obviously consider as we go forward if rates get lower and you look to refinance. The other thing I did want to point out, because I know we discussed a little bit about bond, and then we discussed e-housing, and then we discussed if it's bond, if it's not bond. I had a borrower over the weekend that gets a little bit confusing with some of this. So I kind of pictured imagine like a supermarket, and that supermarket is called e-housing. And then once you walk into that supermarket called e-housing, you're going to choose what aisle you're going to go to, whether it's going to be a bond program, which is offered by e-housing, the Hometown Heroes program, which is still offered by e-housing, or other bond loan programs, which is still offered by e-housing. So, and then depending on the aisle that you go down is going to depend on the qualifications or the guidelines that we have to go ahead and kind of put together for you. So they're all offered by e-housing, although they all have different names. They're all offered by the e-housing administration, if that makes sense.
And there's a lot of down payment assistance programs out there. So I'm running into ones where some of them are forgivable after, 10 years or so. So, I sometimes struggle with those, but we really try and take a look at those. But a lot of times I think, oh, wow, $10,000 is forgivable after 10%, after so many years. But often the interest rate on the first mortgage is so much higher than the going interest rate on the loan. So you can end up paying so much more interest on your first mortgage than the actual second mortgage. So if you're paying a 0.5% higher interest rate on a $300,000 loan, you're at $1,500 more in interest, like for your first year. So by, obviously it's $1,500, $1,400, $1,300, but after 10 years or so, you still spent $12,000, $13,000 more in interest to get maybe a $10,000 forgivable second mortgage. So I sometimes question, how much are we helping you with some of these? Now, that's not always the case. And I will say, when the Hometown Heroes came out, I was expecting the same thing. I was expecting a high interest rate loan that was going to be, I'd have to really think about whether I'm helping my customers out. But the interest rate is better. The interest rate is better. The closing costs are better. Everything's better, so it's a pretty good loan. It's a great loan, as long as you understand I'm buying now and saving later instead of saving now and buying later. But if you keep that in mind, you're still good. So but Tom, that's a great analogy, definitely.
Keep in mind, one other thing I just want to point out: if in fact you get a Heroes loan today under today's rates, and everything is fine, and you're able to take advantage of the no money that you need to pay back, and let's say in 2 or 3 years rates don't come down, where's the issue? You still don't have a loan to pay back. Let's say the rates don't come down in 4 or 5, then wait till the rates come down. And if they don't ever come down, let's say they stay up here, you've got the money that you don't have to pay back. So, overall, again, my biggest thing I try to explain to my borrowers is the loan program. We'll find the right one. It's the property we need to kind of focus on and finding the right property as well.
All right, now, I do want to say something while you have me on that before we've got it. Is, I've sat in some conferences with some owners of some pretty big lending companies, and they've said to the loan officers, hey, you can get maybe 2-3 refis out of your customers as the rates drop, which is not a good thing. I mean, it's not a good thing. It's a good thing for your loan officer, maybe, but it's not a good thing for the customers, because no matter what you do, there are costs. And regardless of whether people say, oh, it's a no closing cost loan, you're paying for it somewhere. You're paying for it in rate. But the government fees don't go away. They're not going away. So you still have your title fees. You still have your tangible and your intangible taxes, except for on some of these loans here, you have some reduced ones, but these are purchased for first-time home buyers. But you're not getting rate discounts or closing cost discounts on refinances. So you're going to start getting calls from the greatest salesmen that have ever been born the second the rates start dropping a quarter. They're going to convince you that it's a good thing to refinance every quarter point or so. And as you're just eating up your equity as you're doing it, the loan officers are getting paid. So you need to make sure that you're checking with your loan officer at what's a good time to refinance. But you don't want to be refinancing every quarter, or every half, or every whatever. But we want to watch and see what's happening with the market. And again, like we showed earlier, there's no guarantees on what's happening. But I won't be refinancing because I picked up a quarter point in rate as it looks right now. I probably won't be refinancing if I'm picking up a half a point. As you start picking up a point, we want to start talking. But be careful, because your phone is going to ring off the hook the second you close with people trying to refinance you immediately. So just beware.
And it happens a lot with VA loans. And sometimes because VA loans, you can do a little bit higher loan to value. And regretfully, in the industry, it's kind of called churning, where you just go after the same borrower. You keep refinancing 25 bips here, a quarter of a point there. And it's really not good for the borrower whatsoever. So call us. We'll do some math to let you know when we'll show you the financial benefit or not benefit of refinancing with today's terms and rates.
All right, Tom, do you want to touch a little about home run?
Home run is, again, another home buyer's assistance program. This one's not offered by eHousing. This one is a limited program. I believe it's only offered to 19 lenders throughout the country. Luckily, the mortgage firm is one of those 19. So this offers a 3% down, no first time buyer, 3% down buying opportunity with no mortgage insurance. So you see it's a loan down payment program that was created to help make buying homes a lot easier and more affordable. So down payment as low as 3%. Only 1% from the borrower funds are required. We'll get into that. 640 minimum credit score is needed. That DTI limitations, that means debt to income limitations, they do kind of tighten up the debt to income limitations on this loan program. But there is no mortgage insurance required. Mike and I have been in this industry for 20 years plus, 15, 20 years. It used to be that no mortgage insurance requirement meant, well, great, what's my rate going to be? Because you're going to bury it in the interest rate. That's not the case with this program. It's available for primary resident purchases only. Flexible credit guidelines. Flexible meaning, I think it's a 660, 640. We have it.
640. Well, wasn't it 640? I think we can go to higher. We go to higher DTI.
Yeah, 640 or something is the minimum, I think, credit score with this one. Again, 30-year fixed. Interest rates are completely on a separate rate sheet. With this product, we do have to look up the property address, correct?
Yeah. So we're going to go and let's take a look right now at the property address. Let's kind of blow
there we
this
go.
up a little bit.
Right on cue. Look at that. Look at that. Right on cue.
Here we go. Now, this is a lot of times they'll look at area median incomes. All right. So and again, usually the way it used to be is you're like, all right, there's two pockets. There's two pockets. Nobody's going to qualify. So it didn't apply so much before. It applies now. All these areas right here, all these areas are areas that the dark areas that it applies. So you can see it's a substantial amount of area that applies. So you see a lot through LakeWorth, even down through Boynton Beach, all the way through West Palm, a ton of areas of West Palm, as you would expect, not a whole lot of Palm Beach Gardens and one tiny little square in Jupiter. But that's a substantial amount of West Palm Beach that qualifies for these programs. 3% down, no MI. And it's a lot of, areas where, there's nice houses. Now, obviously, as you start going out west, Belglade around the lake, and I'll tell you what, I spent a lot of time out there in another life. I love it around the lake. I think Lake Okeechobee, that whole area is a great area. And I know I've been saying it for 30 years. I've been thinking it's going to blow up a little bit more, but I definitely think that we're going to see maybe in another 30 years that it happens. So, but as we come down a little bit, let's take a quick look at as we come down to Miami, because I got one. Let's take a quick peek at Fort Lauderdale here. I mean, that's a lot. You start looking at a lot and look at Dade County. As we come into Dade County, I mean, you're hard pressed to find some pockets of Dade County that don't apply. Mm-hmm. You're looking right here on the water, doesn't apply. Even right here, you're on Miami Beach. You've got some huge pockets on Miami Beach. These condominiums that apply. It's going to apply. And again, it's not first time home buyers, but you can't own another property. So you can be selling a house and buying a new house and you qualify. So it's really just, it's an incredible program. And it's one we definitely want to start hitting a little bit more. Now, it's weird. I was looking at Hollywood, a customer right now I've got to look up. of course, Hollywood, it looks like there's a lot of pockets that maybe Hollywood doesn't cover. But, look here, Plantation, Coral Springs. Coral Springs, my wife grew up in Coral Springs. Pompano Beach, a good chunk of Pompano Beach qualifies. So it's again, it's another program that's very applicable. It's not one of those other programs that sounds good. Tom, what was that one program? Somebody was advertising recently. We found out it was applying to just about nobody. And I don't want to mention any of the big banks, but one of the big banks was talking about a 1% down type of program. It was for certain minority groups, and it just did not apply.
After reading the small print, it would apply to very few people. I don't recall the name of the bank either. I don't know. For some reason, red, white, and blue comes to mind as far as their signs. But yeah, I don't necessarily recall the name of the bank. But yes, there was a loan program that they came out with to help their Community Reinvestment Act, or a CRA, something that banks have to do on the regular. But they can come out with these programs all they want, so it looks good for the government requirements. But that doesn't mean that they also set the guidelines. So look, I can come out with a loan program myself. Everybody's got to have a 900 credit score, $6 million in the bank, and 50% loan to value. That doesn't mean I'm going to get a lot of takers.
So
no.
Well,
anyways, we appreciate there was a quick 30 minutes going through the Heroes programs today.
A quick 30 minutes for us, but I think for the people that had to listen to me cover the 10-year yield, it might not have seemed so quick.
Well, they might want to wake up and get back to work. Time to get back to work.
This series, it's incredibly informative, and it cures insomnia. So it's a two-part type series. So we noticed we get a lot of views, a lot of people sharing, a lot of people taping, and I get the feeling that they listen to it at night as they're going to bed.
Well, please go to our Facebook page, Mortgage Firm-Wellington. Hit it.
But Mortgage Firm-Wellington, LakeWorth. Like it, follow it. Come join us on Wednesdays at noon. And tmfclasses.com, and sign up for one of our classes. We've got every Wednesday night, we have a homebuyer class. We'll have one tonight at 6:30, tmfclasses.com. And then the first Monday of the month, we have mortgages for realtors. And then the first Tuesday of the month, we have mortgages for Spanish-speaking customers. And generally, Elizabeth will have a mortgage class, not just for Spanish-speaking customers, but it will be geared a little towards Spanish-speaking customers monthly at PR Bakery in LakeWorth. So if you're looking for a legit Puerto Rican bakery, PR Bakery is it. Excellent everything. So hopefully we'll see you at some of our events. And let's announce real quick, Dorothy Jacks will be coming as our guest speaker. Dorothy Jacks, who is the property appraiser of Palm Beach County, probably recognizes absolutely one of the top property appraisers in the state of Florida. And she has, if you know Papa, it's one of the most forward-thinking, innovative property appraiser sites in the state. Dorothy's won multiple awards as one of the top property appraisers, and she helped develop that system. And she has true legitimacy. She's been in that office for over 25 years, I believe, and she's been elected official since the last 6-7 years. So she's going to come and speak August 2nd. That's Thursday, August 2nd at 2 p.m. at the Wellington Center. So we'll start promoting that a little bit more, but we really would like to, start getting that out to, our customers that recently purchased, those that are looking to buy, and all the realtors that we work with. So hopefully we'll see you at a few of our events.
She gives an amazing class as far as how to get around the website. Again, whether you're looking to purchase or not looking to purchase, or even just in the real estate industry, you've got to attend her class. She gives us a tremendous amount of information how to work around that website, which is great. Yeah.
And Tom, I got to compliment you. I love the color of your shirt. It's perfect.
That was coincidental. Just want to let her.
All right, everybody, have a great week.
All right. We'll see you. Thanks.